Welcome to the Swing Trading with Cycles channel. This is our update on natural gas today. It's March 17th, 2023. It's a Friday. The markets have closed. I should say natural gas still has an hour left to close, but things like UNG and BOIL have closed. We have a sense of what the weekly candles are and are set up for next week. Next week is Fed day, the Fed meeting on Wednesday, or announcement, I should say. Definitely take a look at the pinned comment. You'll find the past videos, get up to speed, understand some important concepts like around price action and cycles. Speaking of cycles, we are on this is your daily chart of natural gas Henry Hub futures. We are on day 17, as we said. We just closed on, or I should say we're going to close on Friday. So it's day 17. We had our high on day 7. Let's think about the simple math there. That means we've had a 7-day rally. That's our 7-day rally. And so far, we've had a 10-day decline. That's how we got to day 17. 7 days up, 10 days down. Now, as I always say, a big candle can cure everything. So imagine if Monday we got a candle like that. Well, boom, that's bullish, obviously. Now, is there any reason to think we will get a candle like that? I don't think there is, but we'll see. More likely is that we're declining into a daily cycle low. The good news, though, is that it's already day 17. If it's something like a 30-day cycle like this one, or a shorter one like 21 or like 24, I mean, that still means, another few weeks of downside, but you're closer to the end than you are to the beginning. It just requires patience here. That said, we didn't completely collapse today, but to be clear, we did make a lower low. You can see this is all drooping lower. But again, as I said in previous videos, there's no reason why you couldn't see something like this. I mean, maybe not that crazy big candle that I talked about like that, but there's no reason why you couldn't do that. That said, it's running out of time. It's got to get a move on. Let's look at the weekly chart real quick. And we talked about this in previous video. We do not want to close as another weekly new low. Look at that. This is our previous week's candle. It closed below the low of the candle before that. So just to be crystal clear, that makes this candle here a swing high. That's bad. The only thing worse than a swing high is a swing high that has other swing highs beneath it, which is to say, if this thing closes below this low and then again you get another candle of follow through, you think about that, you would end up with two swing highs, one beneath the other, right? So you have this swing high and then this would become a swing high right there. Not good. Not a good sign. That's how a downtrend develops, by the way, right? It's just swing high after swing high. The swing highs are lower highs, obviously. So you think about this thing, the bearish scenario is this is just building, this is just a lower high that we're experiencing here on the weekly time frame. Boom, boom, and then something like that. Could also lead to a double bottom, obviously. We have to react to price action as it comes. And let's look at the 2-week chart. That closes next week as opposed to this week. So we still have time to repair this. This goes green above where this thing opened at 2.426. So that's going to be an important level. Got to get back above 2.426. You have a whole week next week to make that happen. So this could still be salvaged. And that takes us to the monthly candle, the big pattern that we should all be aware of. And that's the biggest reason for caution. And it's this idea that this is turning into a bearish monthly outside candle. We made a new high and then we went red. So we still have more trading to go. This could still reverse. But right now, unless we get a bullish reversal, this thing will continue to droop. And it means it's very likely it's going to make a lower low below this low here. And it's the same pattern for UNG and BOIL. And think about it. If the daily cycle is declining, as it seems that it is, it topped out on day 7 and we're currently on day 17, that would mean more downside and this monthly candle getting built out, if you will. And you can see this area down here is like a magnet getting I should say it would be interesting to see if we see some kind of bounce around this level where, this decline stopped, for instance, or if it sort of slices through on its way back down here. But this is a big caution flag, if nothing else. And let's also just get a sense of the quarterly candle, because that closes in March. That closes this week as well. Or I should say that closes this month as well. My God, look at this thing, the setup here. So like best case scenario, you're set up for some kind of inside candle to start Q2. So it just important to know the context within which you're trading if you are choosing to trade this thing. So let's go on to UNG. Look at those equivalent levels. So UNG did close as a lower low on the weekly. Again, as we talked about, we wanted to avoid closing below 802, and we closed down here at 780. And if we look at the 2-week chart, again, it has a chance to repair itself. So this 2-week chart goes green above $8.30. So got to get back above $8.30. And it has all of next week to do that. But the pressure is on because, again, if we go to that daily chart, just like the natural gas futures, this thing is in daily cycle decline. And of course, for this one, there was a gap because it doesn't trade overnight. So it opened up, I think it was down like 25%. Notice we got this little bounce up here. Hopefully that's pretty clear. That is your little lower high, right? Like we started a downtrend on the daily chart. It's pretty clear, right? Like we did this, and then what did we do? We bounced. And now we've done this. And so you would expect that we're going to bounce again. Not to exceed this high would be the expectation if this downtrend continues and we continue the daily cycle decline. The other big question is, like, is this thing going to fail? Are we going to go below this low, which again would give us a new low on the monthly chart? And that, bearish outside monthly candle pattern is actually even worse for UNG and BOIL. I mean, look at that. So the low is $7.14. Okay, so we're about 60 cents away at this point. And finally, let's look at BOIL. Okay, so we take a look at BOIL, and of course, this is actually worse in terms of how close it is. So that's, 30 cents. I mean, let's see, percentage-wise, at this point, it would take like a mere, what is that? Okay, so just another 5% down, which isn't much, which obviously isn't much for something like a BOIL. And let's see, UNG, how far away are we? It is always helpful to quantify that kind of thing. So we're something like 7, almost 8% away, which isn't a lot for UNG either. So I mean, the odds that we break this low are obviously really high, right? I mean, considering how close we are at this point, that might create a massive reversal though. There's no reason that we need to try to predict that. We can just wait for it to happen and play the move from there. And again, you can see this candle is almost complete, right? Like this is the expectation for where natural gas, like Henry Hub futures, for instance, is going. Like we're just really close to taking out that wick. We're obviously, I'm guessing that is like 12% away, something like that. Henry Hub. So we are like 15%. Wow. So that is also gives you a sense that, again, UNG is actually much closer to its low than natural gas itself in terms of getting back to that monthly low. So patience, right? Again, it's pretty simple. We're on day 17 of a daily cycle that has been declining since day 7. And so we watch for that swing low. And most importantly, is it going to be above this? Because even if it's like down here, that still gives you maybe a violent, next daily cycle rally. So patience here.